Do you want to know the types of millionaires' income that set them apart from regular people? In this video, you will get a clearer idea of the strategies and 7 types of income that rich people have to stay rich. Where you could possibly be. Most people only have one, typically from their job, which can put them in a precarious financial situation. It is true that the typical millionaire has multiple cash flows that contribute to their income. Now, not every source of income is created equally. Some are heavily taxed, while others can be leveraged to have no taxes at all. Some are active, while others are passive. As a result, we'll look at the various revenue streams the typical millionaire has in his portfolio today. So be sure to like this video, subscribe to the channel, and hit the bell button so you don't miss any of our valuable videos. And let's start. The first and most common source of income is earned income. This is what you get from a job. This includes the average worker up to the CEO. Many CEOs are still employees of the company. Other professionals, such as doctors or nurses, are also included in this category. And income is when you trade time for money, which is called active income. This can also include freelancers. And income is often the starting point for many self-made millionaires. This is where the average person starts, and it's a good place to start, especially if his job allows him to support himself and his family. But the dangerous part is staying in this category, because this type of income takes advantage of your time, of which you have a limited amount. You, like everyone else, only have 24 hours in a day. Therefore, there is always a ceiling on how much money can be made in this category. This is also one of the highest forms of income taxes. Taxes in this category can be as high as 40% of your income, which means that some people in this category pay almost half of their income in taxes based on their income. This is great as a starting point, but we need to know what other types of income there are. The second source of income is profit. This is the income produced by selling products or services for more than it costs to make or buy them. This is when we go from employee to entrepreneur. In the past, starting a business required a significant investment to purchase or manufacture the product. But it has become much easier in recent years with the help of the internet. Whether you sell a physical product or a digital product, if you sell a product at a higher price than it costs you to make or buy it, you are earning income now. This can be either active income or passive income, depending on your business mode. If you make things yourself and sell them, then it's a more active income and a bit harder to scale. But if you create the product design and have a manufacturer create it for you or make a digital product, it has the potential to become a passive form of income. There are 2 types of income for individual profit small-scale business or highly scalable individual small-scale is when you create the product yourself or change products manually like on eBay or Facebook Marketplace. And that's a great way to add an additional source of income to your portfolio. Scalable profit income comes from setting up a business and having a manufacturer, for example, produce your products instead of doing it yourself. This way, you free up your time to focus on other aspects of your business, such as sales or marketing. The third category of income is interest income. You earn interest payments by charging interest on the money you'll want. Now, we don't really mean lending money to your friends. Usually, this is not a good idea. But there are a few ways to create this form of income. Lending money to the bank in the form of bank CDs, lending money to businesses in the form of bonds, or lending money to the government in the form of treasury bills. These are generally the safest ways to invest your money, but they are not the most lucrative. Many of these have a rate of return of between 1% and 2% per year. Now there may be a few other ways to do it, with a little more creativity and higher profits, but a lot more risk. This is a passive form of income because, in most cases, your active participation is not necessary. Number 4. Dividend income. Dividend income is when you invest in stocks that pay part of their earnings to their shareholders. When you buy a share in a company, you become a shareholder. Every time the company you've invested in reports earnings, it will send a check to its shareholders, usually every quarter. As a shareholder, you are a co-owner of the company. So in companies that distribute dividends, you get a share of the company's profits. Now, depending on the type of dividend you have, You may pay a lower tax rate on qualified dividends. If you make less than $38.60 in ordinary income, you pay 0% tax on your dividend income and top out at 20% if you make more than $425, which is much lower than earned income, which can go up to a tax rate of 40%. Number 5. Rental income. Rental income generally comes from the purchase of real estate and its rental to other people. Now, it doesn't necessarily have to be home rentals. This can also include commercial property, which is real estate that can be rented to businesses, or industrial property, which is rented to manufacturers now. Rental income doesn't have to come from real estate specifically. There are other ways to generate rental income on a smaller scale. For example, many people rent equipment for various industries, or their cars, instruments, etc. Rental income is any income produced by lending a property to someone else in exchange for money. Number 6. Residual and royalties income. This type of income is when you continue to get paid after you finish your job. Whether you worked on a movie that is still being watched, wrote a book that is still selling, or more. Recently, if you created a YouTube channel that is still being watched, royalty income is a form of residual income. Royalty income is the money you earn by letting other people use your ideas or property to make money, like music or books. For example, streaming services and record labels produce and sell their property to the public. So getting royalties every time a song is played, sold, or someone buys a record is similar to getting a publisher to print and distribute a book. As long as people keep buying the book, the author keeps making money. Now there can be multiple royalties collected from the same property. A great example of this is the author J.K. Rowling. She earned royalties not only from the sales of her books, but also from the adaptation of her books into movies and merchandise based on her characters. Although it's been 20 years since the first Harry Potter book came out, J.K. Rowling, the author, still collects royalties. Whenever people buy merchandise, rent or stream movies, or buy books, she receives royalty payments because those products are based on her original ownership. The last point in our video is capital gains. Capital gains revenue is generated when an asset is sold that has appreciated in value. The most common are real estate and shares, but there are many other assets. For example, if you bought real estate for $180 and sold it for $250, you would have earned $70 in capital gains. The same is true if you bought $100 shares of a company at $20 a share and sold them at $120. You made $10 in capital gains. Now this is different than profit income because you're not buying or manufacturing a product and selling it for a profit. Here are some assets that are initiating market value. You don't have much control over the increase in value. But the great thing about capital gains is that the taxes paid on this type of income are much lower than most other forms of income. Capital gains tax ranges from 15% to 20% depending on the amount earned, and can go as low as 0%, like in real. In many cases, if you use your capital gains for real estate and reinvest them in the market, you may not pay any taxes. You can increase your net worth tax-free when we build our income. Most of us know only one or two ways to generate income, but knowing the different types of income and how they are generated gives us a better opportunity to add different sources of income to our lives. Ask yourself which source of income sounds best to you and which one will add to your income next. That brings us to the end of this video. If you enjoyed this video, please leave a comment and let us know. And don't forget to like and subscribe to stay up to date on all of our new content. See you soon, and thanks for watching.